The interest rates will come down.
You said that you would demand that the interest rates come down.
Well, I would put in a strong statement.
Do you expect the Fed to listen to you?
Yeah.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. In light of Trump's statement yesterday in the video attached, strongly conveying a desire for lower rates and that Fed Chair Powell will give him those lower rates, this is very timely. War has been effectively declared on the Fed as part of Trump's plan to make America great again, fiscally. Look, the simple point is this. If Trump cannot get his agenda implemented successfully, this is the dilemma. Even if he does get it implemented successfully, fully successfully, as he envisions, the U.S. will need a weaker dollar to make it work. This is all part of exporting and mercantilism and current account deficits. So yesterday's comment by Trump on rates and Powell's expected subservience foretell a president getting ahead of the fiscal pushback anticipated with his plan being implemented. When it comes down to it, right, when you combine all the factors, all the moving parts that Trump needs to work, if the country is less comfortable with deficit spending, which is a hallmark of what he's saying, for any reason, even growth potential reasons, then their congressmen and their senators are not going to abide by it. So without more deficit spending needed in conjunction with successfully raising tariffs to lower taxes, Trump must have a plan B to facilitate the ability to grow exports. And that plan B is an overt attempt to weaken the dollar. And Trump's comments in the video are the first shots fired in a war with the Fed, which will ebb and flow based on his own policies getting implemented. The conversation that people started having, filtering this into the markets, started on his inauguration. And this is when the dollar dropped 160 points, and then it bounced, but now it's back down there and below. The moral of the story is Besant, his Treasury nominee, before he was nominated, had made comments on why he thinks what he thinks will and will not work in the MAGA way. And what he does think will work is a weaker dollar now for a stronger dollar later. A stronger dollar now will give us a weaker dollar later. And key to making America great again could be tariffs. It could be tax cuts, but it will necessarily be lower energy costs. So this is the rationale that we have at Goldfix for the weaker dollar for the next 4 years. Either it's a lot now or it's a lot later, but there's going to be a lot of dollar weakness as we become or re-engineer our economy, become an exporting nation. So here is that conversation, that podcast recorded just 2 days ago in anticipation of these type of events. And frankly, while we love being correct on something, we did not expect it to happen in 2 days for Trump to start pushing on Powell so quickly. Today saw a very weak dollar, down 160 points or more. I will include a chart of that in this post, but it's significant and it's a reality check. And overall, the reality check is more bullish for gold than it was 2 days ago. So we're going to ignore what the market actually did today for gold and silver, and we're going to focus on what really should happen. So starting at the top of the behavior. So recapping the market. The dollar dropped sharply. Stocks and gold gained, but gold was not as strong as it was in the morning. Silver started out weak, but firmed later. Okay, so the key questions that I'm fielding, or that we're all asking ourselves, is why did the dollar dump so harshly, and why didn't gold and silver rally more despite the weaker dollar? So let's break these down. Okay, why the dollar dumped? All right, reality is setting in. First of all, over the past 4 days or so, the market has adjusted its expectations is adjusting, I should say, its expectations about Trump's proposed tariffs. So the assumption was that universal tariffs were believed to be able to boost the dollar and increase global demand for U.S. dollars in trade transactions, right? Universal is the key word. The reality is some comments from incoming Treasury Secretary Scott Bessent and market analysis or market moves suggest otherwise. These are comments he gave before being elected or nominated. During his confirmation hearing, people started paying attention to what he had been saying over the past months. And what it does is it shows the fragility of Trump's plan. And it's not news to us. And we have conveyed it to you as readers, but the market is digesting it now. But just very quickly, you know, what Trump wants to do is a three-pronged approach. And it was our feeling, and actually voiced by Hartnett as well, that Trump would try to get what he wants to get done, ideally, right? And if he doesn't get that done in the first 100, 200, 300 days, then it's over and we have to have a weaker dollar on the back end. That's what I thought would happen. I didn't think universal tariffs would happen, or put it this way, there would be tariffs, but not as big as people think. All right, so that's where we stood. And all this dollar strength was like, wow, I guess people really think this is going to happen. Anyway, to bring it back to Bessent, right? All right, so collectively, Trump's economic vision includes transitioning from tax to tariffs. This is us still talking. So lowering taxes while increasing tariffs to fund government spending. However, tariffs alone won't cover the tax revenue shortfall, especially in the short term, leading to deficit spending. And we all should know that he's going to spend more than Biden. He's just going to spend it on getting the economy going, as opposed to giving refunds to people and, forgiving student loans. So to be a little bit more specific, Trump's economic plan is three-pronged, right? One, raise tariffs, generate revenue, and support domestic manufacturing that way, right? Industry. Two, lower taxes, stimulate growth, and increase disposable income. One balances out the other if you do it right. And three, increase spending. So invest heavily in rebuilding U.S. manufacturing and infrastructure. Now, the challenges to implementing this are manyfold at the political level, but just the three prongs, right? Ideally, he wants to raise tariffs to fully offset lowering taxes. Raising tariffs will not do that in the short run. In the long run, they probably won't do it either, but what it does is it makes the manufacturing build better because you're subsidizing manufacturing in that way. And he intends to to offset the shortfall by borrowing money. You know, instead of making $10 in taxes, I'm going to make $7 in tariffs, and the other $3 I'll borrow, and I'll spend all of it on rebuilding the economy. Makes sense. Three-pronged approach. All right. So the problem with that is, the numbers have to work. But aside from the numbers, there are challenges to implementation related to politics and elections, right? The Republican majority may resist excessive deficit spending ahead of their own midterms, right? 2 years go by, and it's like, we're not spending more money. Democrats are definitely likely to block tariff increases, creating political roadblocks, strikes, what have you. Even a unified mandate becomes a lame duck by midterms, limiting Trump's ability to push his full agenda. Now, market implications for this reality are setting in, right? Early market optimism assumed tariffs would strengthen the dollar, which is true, right? However, tariffs are inflationary and would increase costs for U.S. manufacturers, undermining our competitiveness. I'm not so sure I believe that too much, but that's what people are using. A strong dollar conflicts with Trump's goal of boosting exports, period, right? A strong dollar makes it harder to sell stuff. You need a weaker dollar if you can't compete. All right, so According to Besant, Trump will likely pivot to a weak dollar strategy to achieve his industrial renaissance. A weaker dollar would make U.S. goods more competitive globally. And you can see this with regards to China. That's a whole other problem. The market's reaction, well, the market seems to have realized that Trump's tariff plans face significant opposition, and investors are, preemptively pricing in a weaker dollar policy to support exports and manufacturing. Gold and silver. Now, initially, the expectations of no tariffs pressured gold and silver prices lower, but the weaker dollar kicks in and the metals recovered modestly, but they're still strong, right? The gains were limited by market uncertainty, right? So moving to Besant's vision for Trump 2.0, which is what he said before he was nominated, right? The first one, I guess you call it economic boom goals. Besant outlined a vision reminiscent of the 1920s. Now, we have that note and the commentary by Zero Hedge on that. We're going to send that to you in this email as well. And it focused on growth and productivity in the 1920s. However, a weaker dollar is crucial to this strategy as it supports exports and offsets deficits from lower taxes and higher spending. Now, long-term productivity gains would stabilize inflation and strengthen the dollar by the end of Trump's term in that way, right? The key risk is, long-term interest rates could undermine the strategy. Now, why the tariff versus weaker dollar concept matters? Well, in the world of manufacturing, if you want to export your way out of a problem, right? We need to export more. We need to grow our manufacturing. You can do it one of only two ways. One is to make a product that people want, that's better or less expensive. So be the manufacturing company that has the lowest cost of production, or the manufacturer of a product that people want the most. So if you look at China, they have the lowest cost of production. Their labor's cheaper, or whoever they use for their labor. We have better goods, but China's getting competitive in that way. But our dollar's too strong for people to buy them. So they'll buy a knockoff rather than the real thing. So we cannot compete with China at the manufacturing of the actual goods level, period. And if you can't compete now, you need a weaker dollar. That's example 2. How do you compete? Well, you weaken your currency to make it so cheap people buy it anyway. So we can't get cheaper labor, right? So we make the price of the good cheaper in foreign currency terms. And they say, okay, we'll buy yours. And there's, these are moving parts, and they all interact. Eventually it comes home to roost, and the American worker ends up having higher domestic inflation, and that's why a weaker currency doesn't work in the long run. But tactically, it's very good because while he's doing this, he's spending money domestically to rebuild the manufacturing. I mean, ideally, that's how it works. But it can work, right? So the U.S. currently lags behind, just to reiterate, now I'm looking at my notes. The U.S. currently lags behind China in manufacturing due to higher costs and lower output. Without competitive pricing, the U.S. must rely on a weaker dollar to support exports, period. So tariffs, which means a strong dollar versus a weaker dollar. Tariffs would increase costs domestically and risk retaliation, making them politically and economically unviable. If we put taxes on silver coming into here, right, then don't put taxes on silver. So the tariff on silver that we implement becomes the global price. It becomes inflationary for silver. So the outlook for gold and silver is, in my opinion, right, prices will likely remain influenced by dollar movements, meaning the correlation will kick back in. Because let's face it, gold more than silver, but both metals have been strong despite an incredibly strong dollar. Does that mean that gold and silver are going to drop when the dollar drops? No. That means they're going to be even more strong if the dollar drops, once the market figures this out. So the market is already pricing in the challenges Trump faces in implementing his full agenda. Returning to my notes, a weak dollar strategy appears increasingly likely as a fallback to support exports and mitigate political resistance. So the key takeaways are Trump's economic reality. While his plan is ambitious, political constraints and market dynamics suggest compromises are inevitable. The weak dollar is central if tariffs cannot be implemented. A weaker dollar becomes the primary tool for achieving Trump's growth agenda. And that's why it becomes a battle between him and Powell again, right? Market implications. Investors are already adjusting to this reality with dollar weakness leading the charge, so to speak. I mean, it's leading the charge today and last couple of days, but let's see what happens a couple weeks from now. And that's it. That's my take, and Hartnett's handicapping happening now. It's like the market today is almost saying, you know what? There's no way Trump can get this shit done. And Bissett has already said that. So what's Bissett going to ask for? A weaker dollar now so we can have a stronger dollar later. And that's why the hype never happens. And I'm not saying this cynically. I'm saying this because you get people pumped up for fixing manufacturing. And then you run into an obstacle, whether it be rhinos or whether it be fiscal conservatives or whether it be the Democrats themselves. You can't get your agenda done. You lower the rates. You continue spending because you're going to do it anyway, and you spend that money on what you need to rebuild. And if it's done properly, we end up coming out of this in a Reagan it's like 1982, okay? If we don't come out of this properly, it's like 1977. And that's it. I think it's going to be 1977 for gold and silver, not 1982.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. Sure hope you enjoyed the show. Thanks for being here. Although before we wrap up, there was one thing I had to let you know, and here is the silver chopper Ben Bernanke.
That is so cool.
Can you even see his tie flying in the wind while he throws out $100 bills?
Look at him getting ready to throw that money out there.
I see that.
Because that's what it looks like when
That
Ben
even looks
Bernanke-
like his sorry ass.
Look at the size of the bald silvery head.
Yeah.
It's enormous. Back propellers spin too.
How many ounces is that?
That's 26 ounces of 3/9 fine silver, homie.
As you can see here, some of the key features with your silver chopper Ben figurine, you can really get the control panel. Look, there's a whole dashboard for Ben to fly.
He wants to fly onto your desk and throw
Yeah,
$100
here,
bills
Ben.
out. Look at the precision.
I see that.
Crazy old bastard.
He's got 2 sets of spinnable propellers
This
built.
thing's great.
Dude, you could fly that thing.
Wow. I could.
Look how happy he is. I think he's actually going to get out there and throw the $100 bills.
Jerome, no!
There'll be $1,000 bills by then.
I got this.
I like it.
Get the history before it's made.
Just click the link below to get your silver chopper Ben now. So yes, if you have always dreamed of having a silver minted helicopter Ben Bernanke flying into your kitchen and throwing $100 bills all across your home, well, now is your chance to get your very own silver chopper Ben with multiple spinning propellers and Ben's familiar brand of easy money love. We'll also toss in the Got Silver coffee mug. And you can find out more about that by clicking on the link below. But yes, we did mint Ben Bernanke in silver helicopter form. That's 26 ounces of 3/9 fine silver. And to get yours now, click on the link in the description field below. And with that said, we will see you again tomorrow.